So if you guys want to learn about the stock market in 60 seconds, make sure to watch this video all the way to the end. Comment, like, and subscribe. Let's go. So let me start by asking you a question. What is the stock market? The stock market is a place where people can buy and sell shares of publicly traded companies. But what does that mean? Well, when a company goes public, it's like opening up a store. Anyone who wants to invest in that company can buy a little piece of it called a share, and the price of those shares is constantly changing based on supply and demand. If more people want to buy a share of the company, then the price will go up. But if more people want to sell their shares, then the price will go down. Why do companies go public? Well, it's like opening up a store. You might have started out as a small mom-and-pop shop, but as you grow, you might need more money to help fuel that growth. And the stock market is a way for companies to raise money by selling shares of ownership in the company. Now, why would someone want to buy a share of a company? Well, when you buy a share of a company, you're buying a little piece of that company. And as the company grows and makes more money, the value of your share goes up. It's like owning a piece of the action. Some people buy shares because they want to support a company that they believe in. Other people buy shares because they think the company will make a lot of money in the future. So how do you make money in the stock market? There are two ways to make money in the stock market. The first way is to buy low and sell high. This is when you buy a share of a company at a low price and then sell it at a higher price. The second way to make money in the stock market is to buy shares of a company that pays dividends. Some companies choose to share their profits with shareholders by paying them a dividend. The amount of the dividend will vary depending on the company and how much profit they've made. What are some risks to consider before investing in stocks? When you invest in stocks, you're taking on a certain amount of risk. The price of the stock could go down as well as up, and you could lose some or all of your investment. It's important to do your research and only invest money that you can afford to lose. What is a bear market versus a bull market? A bull market is when the stock market is going up. People are optimistic about the future and are willing to invest money. A bear market is when the stock market is going down. People are pessimistic about the future and are more likely to pull their money out of the market. What is a stock index? A stock index is a group of stocks that are tracked together. For example, the Dow Jones Industrial Average is an index that tracks the price of 30 large US companies. What is a broker? A broker is a company that allows you to buy and sell shares of stock. They make it possible for you to invest in the stock market. We talked a lot about investing in this video, but there are other ways to make money in the stock market. Some people buy shares of a company because they want to support that company. Others buy shares because they think the company will make a lot of money in the future. So what are some things to keep in mind before investing in stocks? First, you should always do your research before investing in any company. It's important to understand the company's products and services, as well as its financial statements. Additionally, you should consider the risks involved in investing in stocks before you get started. Thanks for watching this video on the stock market. Hopefully it was helpful. If you want to learn more about the stock market, there are plenty of resources available online and in libraries. With a little bit of knowledge and research, you can make informed decisions about investing your money in the stock market. Comment, like, and subscribe. See you next time.